Okay, well, I make it 11:30, so let's get started. Welcome to our webinar. Today we're talking about payroll, and hopefully we'll learn some top tips about payroll. I'm delighted to be joined today by Simone Brown and Ian Sargent. Simone is tax manager at Rotherham Taylor and Ian is a manager. Throughout the webinar, we do have the opportunity for you to ask questions. We will have a Q&A at the end of the presentation as well. So if you've got any questions you'd like to ask, please use the Q&A panel on the Zoom toolbar, and we'll try and answer as many as we can when we get to the end if we have time. But at this point, I'm going to hand over to Simone, and I'll come back at the end for the Q&A. So over to you.
Thanks, Jo. So today we'll run through a few bits on payroll, our top tips, both from an advisory and a processing perspective. So we'll just run through the list of everything that we're going to cover in today's webinar. So if I can have the next slide, thanks. So we'll start with an update on the coronavirus job retention scheme. We won't go into great detail about the history, more just what you can expect from the next few months. Then we'll have a look at what you need to do and when you would need a formal payroll scheme. We'll run over our top payroll processing tips, the top payroll advisory tips, and then the top benefits in kind that you can claim through your company that are all very tax efficient. So moving on to a general overview of the coronavirus job retention scheme. I've included in the table details of what the scheme was like in July and August, but as I said, we won't go into those in great detail because the past is the past. We're beyond that now. But as you can see, July and August were quite similar months. In August, the government stopped contributing towards the employer's national insurance and pension contributions, and that moved over to the employer. So we'll have a look at what's going to happen in September and October before the scheme ceases. So in September, we'll have a look at that in a moment, but there are a few points that you need to remember for this table. All the wage caps that are mentioned are proportional to the number of hours an employee is furloughed. And you can only claim for these months if you've previously furloughed an employee for 3 consecutive weeks between the 1st of March and the 30th of June, and you've already submitted a claim by the 31st of July. So if we move on to the next slide, there's just a cover of those points that we've mentioned, but they are worth bearing in mind. So if we move on to what's going to happen in the month of September. So from the 1st of September, the value of the grant has fallen to 70% of wages, and the employer is now required to contribute 10%. The government contribution, which was £2,500, is now capped at £2,18750, which should be 70% of the usual wages. So the employer contribution means that the employee is still receiving the same amount. It's just that the employer is now expected to put some money towards the employee's salary. So moving on to October, the value of the grant is going to fall again, this time to 60% of wages. So the employers are now required to contribute 20% towards the overall salary. The scheme's going to end on the 31st of October. It's been clearly stated that there's no plans for it to be extended again. It's definitely not going to happen. So bearing in mind that the scheme will end on the 31st of October, employers now need to decide whether to bring their employees back on normal hours, whether to reduce the employees' hours and still keep them on, or whether to terminate the employment completely. But it is worth noting that normal redundancy rules apply if you do decide to terminate. It doesn't matter that it's coronavirus related. So moving on to the next section, when would you need a formal payroll scheme? Sorry, I've skipped a little bit there. So what happens next? Employers can bring staff back from furlough, but if you keep them continuously employed until the end of January, you're able to apply to claim a grant of £1,000 per employee. But to be able to claim this grant, you need to have eligible employees. So those employees must earn at least £520 a month on average between the 1st of November and the 31st of January. So you can't bring an employee back on drastically reduced hours, paying them a very minimal salary and still be able to claim this grant. There aren't instructions available yet either about how you can claim the grant. We're expecting those shortly. But from a timeline perspective, you can make the claim after your January payroll submissions have been filed, and we're expecting the money to be paid by the government from February onwards. So moving on now properly to where a formal payroll scheme is needed. If you make salary payments in excess of something called the lower earnings limit, which is £120 a week for this tax year, which runs from April 2020 to March 2021, you need to register with HMRC for a formal payroll scheme, and you'll be expected to file regular reports of what money has been paid to employees, how much tax and national insurance everybody owes, and so on. It's worth noting that the £120 a week is a per week limit. It's not an average weekly earnings limit for the year. So if you go over the £120 even for 1 week, you will need a payroll scheme. So if you do need a payroll scheme, what are your options? You can either manage the payroll yourself directly with HMRC. They do have their own free software that you can use called PAYE Basic Tools, but it's certainly not a scheme that's designed for every payroll scenario. So if you have quite complex payroll affairs, you may decide to use a cloud software package such as Xero, or you may decide to appoint a professional payroll advisor. You may ask yourself, if there's free software available, why do I need an advisor? Or there are firms that operate purely doing payroll as a bureau. So payroll can become quite complicated very quickly, because you need to ensure you're paying the staff the correct amount every week or every month in line with national minimum wage and national living wage. You also need to make sure that you're making the correct deductions for tax in line with the tax code that HMRC issue. Make sure that pension contributions are correct in line with auto-enrolment and pension legislation, and keep up to date with student loan deductions. It can be very time consuming to keep on top of all the changes in legislation, which do happen frequently. And if we move on to the next slide, the costs of these mistakes, if you're not keeping up with the legislation, it can be huge in terms of employee disputes. If you're paying someone the wrong amount, or if you're deducting the wrong amount of tax and then HMRC ask them to pay the underpayments. HMRC investigations can be quite costly from both a tax and a professional advice perspective, and the pensions regulator can also get involved. It's also a question of, do you want to spend that amount of time running your payroll, or is your time better spent running your business, with you outsourcing the payroll knowing that it's being done correctly, and you're spending your time better? So we'll now look at our top payroll processing tips. Our first one is to check for any tax code changes or student loan notices and other HMRC notices before processing the payroll. It used to be the case that these notices would be posted out to you, but they're now all uploaded to your online payroll portal, and it's your responsibility as the payroll processor to make sure you're going and checking if these notices are there. As we said on the earlier slide, if you were to miss one of these notices, it can be quite costly. So it is something you need to take care of. The second one is to make sure that you're meeting your pension requirements for the staff and check again monthly updates about staff pensions from your pension portal to make sure you are processing the correct amount. You need to check the correct pay date before processing. I know it sounds silly, but if the pay date is wrong and you run the payroll, it can be quite time consuming to have to go back, inform HMRC that you've made an error and reprocess everything. The next one is see if it's possible to import or export payroll data to save time. For example, if you are running your payroll processing outside of your bookkeeping package like Xero, you do need to import the payroll information into your bookkeeping package. So if you have the facility to export the data and then import it into the other package, it's a lot more time efficient than you having to manually type in all of the payroll details. Finally, it's important to have good record keeping and to keep a file of, for example, the pay slips, your monthly summaries, details of any amounts that you've paid to HMRC for tax and national insurance, a backup of timesheets for the hours that you're paying staff. At the time, it might seem that this is a lot of information to keep that you might not necessarily think that you need after you've run the payroll. But in terms of if you have a question from HMRC or the pensions regulator, or even from an employee querying a historic payslip, it's always good to have the information stored somewhere safe so that it's easy to gain access to. Carrying on with our top processing tips. So we'd advise that you check if you are eligible to claim the employment allowance. This is quite a substantial allowance because it can knock thousands of pounds off your employer's national insurance bill. The rules on it can be quite complicated, but it is worth reading up on because a lot of people may not be claiming it, and the payroll software certainly won't tell you if you're entitled to it. It's sort of a tick box for you to say that you have checked and you are allowed to claim it. Next, employee contract templates. In the early days, it might be the case that you don't have anything formal in writing or not in great detail when you take employees on, but it is important to have full contracts so that everybody knows where they stand. And as you bring more employees on, if you have a contract template, then you're in a good position from the very start. You should keep up to date with all your statutory payments, and again, make sure you know what you're entitled to claim. So that's things like statutory maternity pay, statutory paternity pay, statutory sick pay, and shared parental payments. If an employee leaves, you need to make sure to mark them as a leaver and issue them with a P45. This can have quite big implications for you as well as the employee. For example, they won't pay the right amount of tax at their new job until they receive their P45 from you. Ask for employee email addresses so that you can send information electronically. This is quite good, for example, if you send out the monthly or the weekly pay slips, for example, by email, because you have the email address from the start. You can password protect the document, which is good for GDPR purposes. And then the employee has always got the pay slips somewhere safe in case they ever need them in future. And potentially set up a direct debit for PAYE payments for tax and national insurance, because it can be easily overlooked if you've got a payment upcoming and you forget to set up the payment from the bank account, whereas with a direct debit, you know that that is always going to be paid on time. So we'll move on to our advisory tips next. These are quite high-level overviews, but we can discuss them in more detail if anyone's got any specific questions. So the first one is to consider salaries versus hourly paid staff, in the sense that hourly paid work could be better for seasonal businesses. So if your business is very up and down For example, if your trade is, if you have more sales in the summer as opposed to the winter, you may not necessarily want to or be able to afford the cost of keeping people employed over the winter months on a set salary. Whereas if you were to pay them on an hourly basis, you could pay them for the hours that they work. And as your business winds down, maybe over the winter, your salary costs would reduce accordingly. The next one is to plan ahead to avoid RTI penalties. So those are the real-time information submissions for the regular payroll and for late PAYE payments. So sort of in line with setting up a direct debit to make the payments, you do need to always plan ahead. So for example, if you're running your own payroll, you would want to plan, if you were to go on holiday, that the payroll is sorted before you're away, so that you don't potentially get a penalty for just accidentally forgetting to do it before you go. Consider paying holidays instead of time. Time off for 0 hours contract employees, so you know where you are. So everybody accrues holidays as they work. So if you have people that say work set shifts and they wouldn't necessarily book holidays, you would just rota them on for when you need them and when you can fit them in, for example. You wouldn't necessarily want them to be accruing holidays that they then may decide to take at a time where you need them in the rota. So what you might decide to do is every month, as you're calculating the hours that you need to pay them for, you could pay them for the holidays that they've accrued at the same time. So you would then know where you stand in terms of the amount of money that you owe to them, but then also know that they're not carrying a lot of time forward that they might potentially book off in the future. When starting a business, consider the inflow of cash when determining the date that you pay your employees. So for example, if you have customers on payment terms where you're expecting them all to pay at the very end of the month or the first of the month, you certainly don't want to arrange for your staff to be paid at the exact same time, because if they're a few days late, it could result in cash flow problems. Pay your staff monthly rather than weekly to cut down on admin, because when you pay your staff, you have to submit a payroll submission every time. So if you were to pay your staff weekly, you'd be looking at a lot more submissions than if you were to pay your staff monthly. Make payroll information collection part of the employee onboarding process. So this also sort of links to having an email address for your employees. Ideally, you want to get all of the information you require for an employee when you first perhaps offer them the role or bring them on at induction, because you know you've got everything that you need then, and you're not having to go back and forth perhaps on a tight deadline when you're waiting to run the payroll. Watch out for changes in minimum wages and employee age changes. These can be, they can become problematic if you were to miss a minimum wage change, because as the payroll processor, you are expected to keep up to date with the legislation, and you do want to ensure that you are paying the employees the correct amount. And finally, take advantage of the Kickstart scheme and apprenticeships. So the Kickstart scheme is fairly new. The government will provide funding to create new 6-month job placements for young people on universal credit who are at risk of long-term unemployment. And this has been introduced as part of the response to the coronavirus pandemic. Or there are the usual apprenticeship schemes that you could apply for, which the government will give you funding to cover some of the cost of training. So those were the advisory tips. We'll move on to benefits in kind now. So these are the biggest tax exemptions for expenses that a company can pay for. If you don't meet the exemptions, a lot of these sorts of costs would need to be run through the payroll, which can make the payroll process a lot more complicated. So we'll just cover the big ones and what the actual exemptions are. So if you were to provide a mobile telephone to your employees, the contract must be in the business name and must be paid from the company bank account. If it's not paid from the business bank account or it's not in the business name, the rules are quite tight on what you can actually pay, and a lot of the time the amounts, if these conditions aren't met, would need to be included on the payroll. Consider company cars versus mileage. So it's not always beneficial to provide your employees with a company car, especially if the CO2 emissions are quite high and the car brand new would have cost quite a lot. Sometimes it can work out more beneficial from both a tax and a cash perspective for both the employer and the employee for you to pay mileage instead at the HMRC approved rates. The home working allowance is a payment that's designed to cover the additional costs of working from home for employees. It was £4 a week, but in April this year it was increased to £6 per week. You don't need any supporting paperwork to back this up, but the employees must be required to work from home. If they choose to work from home, then the tax exemption doesn't apply. Trivial benefits of up to £50 per year, per time, but there is a cap of £300 a year for each directors. So a trivial benefit is something that's not cash, it's not exchangeable for cash, and it's not in return for services. So, for example, you couldn't take someone out for a meal for a job well done because they've met a deadline on a contract. But if you were to give someone a £30 gift voucher and say, happy birthday, here's a voucher, that's fine. It is only up to £50 each time now. Staff entertaining of up to £150 per person per year. So this doesn't need to be £150 in one go. You can have several functions over the year. So for example, if you want to have a Christmas party or go out in the summer, that's fine. But it is worth noting that it is up to £150 per person per year. If you go even 1 pence higher than that amount, the whole amount would be taxable. So it's just worth keeping that in mind. So those are the top benefits in kind. We'll move on now to any questions. So if Jo can just let us know if any questions have come in from anyone.
Yes, a couple of questions. So we've got one here which is about the apprentice scheme.
Okay.
So how does that work, and how does that fit with payroll processing?
Well, basically, it's sort of a bit to the side of the actual processing of the payroll. But if you do take on any apprentices under the age of 25, then there is a £2,000 incentive available. For anyone over the age of 25, it's £1,500. But they have to be enrolled on an HMRC or government recognised apprentice or training scheme, and also the payments are split in two halves, so they're paid 90 days into the training and also 1 year after the training starts as well.
Okay, thank you.
Oh, sorry, probably just mention as well, there's a Kickstarter scheme as well on the side of that. So, but that is only open for 16 to 24-year-olds. Basically, HMRC, they're anticipating a lot of unemployment from people of that age. So they're offering to pay 25 hours per week at national minimum wage for people between that range. It's a bit more complicated than that because 30 employees are supposed to sort of claim at the same time. So a big employer would easily get 30 employees and put them all in one group and apply for that at once. So what they're sort of advising for smaller employees, which probably is more of interest to people watching this, is that they're encouraging you to contact a local authority or maybe like a chamber of commerce, and what they will do is group together sort of applications so that you get over 30 at once, basically, and then people will sort of be able to apply for the money, basically.
Okay. And I've got one other question here about the job retention scheme. If you've done the payroll yourself and realise that you've made mistakes, or they alert you to mistakes, are there fines likely to be paid?
Well, there could potentially be, because they have said that they're setting up an audit team to come and investigate, any claims that have been made. Although if you do spot an error that you've made, before you come to do your next application, there is a box to tick to say that, you've noticed a mistake on a previous return, either that you've over or underclaimed, and there's an opportunity to correct that yourself when you're doing your next return.
Okay, understand. All right, thank you. Okay, well, that answers our questions today. Thank you very much to Ian and Simone. Very useful. We will make a recorded on-demand version of this video available on our website. So if you would like to rewatch it, you're more than welcome. And we look forward to our next one. Thank you very much.